All right, April 15th, 2024. Welcome. How are you doing? Let's dive into today's live stream. I'm your host, Jaden Sterling, founder of Sterling Stock Picker, and thanks so much for being here with us today. Let's talk about, I wanted to give you some direction. some direction for this stock market. And I think to do that, I want to give some context around the direction of the stock market. So there are essentially two indicators that help guide the decision making and trajectory and all of those, like putting resources to work in the equity markets. And those are leading and lagging economic indicators. So I wanted to share with you a site that I really, really like. It's called Investopedia. I hope you're familiar with it. If not, as you want to learn more and more about the stock market and investing, this is a great resource for you. And it's talking about what is an economic indicator. An economic indicator is a piece of economic data, usually of macroeconomic. Macro is the broad economics. Micro is the more honed in, dialed in economics. So macroeconomic that is used by analysts to interpret current or future investment possibilities. These indicators also help to judge the overall health of an economy. So when we look at economic, as I mentioned, essentially there's two. There's the leading indicators, and these are the yield curve, consumer durables, net business formation, share prices, and are used to predict the future movements of an economy. So the yield curve, we know, is still inverted. In fact, almost on a daily basis, it becomes even more inverted. The short-term rates and intermediate-term rates are moving up as the long-term rates still stay low, which is just not at all what is required of a healthy economy. A healthy economy, I've covered this in the past, has always been built on low and what's called a normalized yield curve, low short-term rates, higher long-term rates. So let's get into the lagging indicators. Lagging indicators such as gross national product, GNP, CPI, we've talked a lot about that, the consumer price index, unemployment rates, and interest rates are only seen after a specific economic activity occurs. That's why they're called lagging. So these are events that have taken place and they're being measured, and an opinion is being formulated by the past events as to whether or not it's good to invest in the market, in the equity markets, and if so, what direction do we move in? And you can read, I'll put the link to this in the show notes today so you can read about this. But let's talk about the stock market as an indicator. Leading indicators forecast where an economy is likely headed. One of the top indicators is the stock market, because stock prices factor in forward-looking performance. The market can indicate the economy's direction if earnings estimates are accurate. This last statement is essential. Why? Because we find ourselves in the beginning of earnings season, and these numbers that come out now for the next 6 weeks are really crucial in terms of the health of the economy and the direction of the equity markets. So we need to see where companies are hitting their earnings expectations and or exceeding earnings expectations. Very, very critical at this time and juncture. The bank stocks just started reporting last week, so this is super timely that we're talking about this. And Goldman Sachs earnings came out fantastic. So I think when you, and I'm going to give you a stock, my number one stock pick right now at the end of the call today. But I think what we're starting to see is, I've been thinking a lot about this equity market, and we know tech stocks are essential to your portfolio. They are the ones that are driving the NASDAQ. They're the ones that continue to really outshine the rest of the market. But there's also another sector that I want to talk about at the end of the call that I think is key to have your money invested in. So let's look at, this is another really great site. I'm going to put the link of it in the show notes today. And this is the United States Census Bureau indicators. Super helpful. I think you'll really get a lot out of this site. But as you look, what you're looking at here is an index that is the Bureau Index of Economic Activity. They call it the IDEA. And it's an aggregation of 15 of the Consensus Bureau's primary economic data series that provides a single-time series constructed as a weighted average. So essentially they took 15 of these metrics, combine them all, and then they get a reading of these combined. So you can see Great Recession, right? 08, this number was quite low. The index was down 5.36. COVID was worse, down 10.93. But look at the recent one, March of 2024. We're sitting right at the median. If the median were 0, we're at 0.5. And, really, if these numbers are accurate, then that really shows that we don't have too much to be concerned about right now in this economy. You can see here's the 5, 10, 15, 20, 22 different indicators that are charted and tracked. These are interesting. I highly recommend you look at some of these. They're all good. You want to look at the retail inventories. You want to look at, here's new residential sales, really depicting the real estate market. Profits. Just super interesting. Quarterly profits from manufacturers. Manufacturing corporations seasonally adjusted after-tax profits were $194.8 billion for the fourth quarter of 2023, down $30 billion from the third quarter of 2023. This is the one that is the most interesting right now in terms of the disparity of third and fourth quarters, back to back. This was the biggie. The other biggie is the new residential construction. We're looking at an uptick. So privately owned housing starts in February. We're at a seasonally adjusted annual rate of 1,521,000. This is a 10.7% increase above the revised January estimate of 1,374,000. So other than that, the rest are pretty much in the range where they were previously. Not a big jump from the other. But I'll put the link to this so you can have a look. And I want to, it's this company here, Charles Schwab. They, as I think about this equity market and I think about how well it's done and how much these companies have brought in terms of asset under management. Schwab acquired TD Ameritrade a few years ago. They're finally in their last leg of rolling over all TD customers into under their umbrella. And, when we know the equity markets are going up and we see companies like this increase their assets under management on an exponential basis, I'll tell you why I think this is so critical right now. BlackRock just announced earnings last week. And earnings for BlackRock were, I'm just going to I want you to take a look at this, because this is really interesting how let me just look up. I have such a mental block to BlackRock. Okay, I can't even remember the ticker symbol. BBLK is their ticker symbol. All right, so listen, y'all, look at this. BlackRock, the stock price is $763 a share. Market cap is $113.6 billion. Okay, I want you to remember that number, $113.6 billion. But their most recent earnings came out where they announced that they have AUM, which stands for Assets Under Management, of $10.5 trillion. $10.5 trillion. Now, if you go to BlackRock's, let me go to their summary company description. They talk about, let me see if we have it in ours, publicly owned investment manager. The firm primarily provides its services to institutions, intermediary, individual investors, including corporate, pension, blah, blah, blah. Third party, you can read this. Endowments, foundations, charities. But if you go to BlackRock's, let me take you to where I was earlier that I thought was just fascinating. I think you will too. If you go to, let's see, where was I here? Stay with me, because this is really, really interesting. Let's see if I can get this article. Let's see if we can just go directly to BlackRock's site. BlackRock. Corporate website. Here we go. All right, now we're cooking with gas. Okay, so much of how they come across is wanting to help the individual investor. That's who. And by the way, you all know BlackRock, right? I assume you do. I've talked about them so many times. And their most recent SEC filing, here it is, Investor Relations SEC filing. This is what I want to look at. This is their 8K. I've talked about the importance, if you own shares of a company, always look at these filings that they do with the SEC. This is the 8K, so this is going to give the most, where is that 8K? Here we go. All right. So here we go. This is the page I wanted to get to. BlackRock reports first quarter 2024 diluted earnings per share of $10.48, or on an adjusted basis, $9.81. $76 billion of quarterly long-term net inflows reflect continued strength in their broad-based platform with positive flows across asset classes and client types. Y'all, $76 billion of net inflows. That much money going into BlackRock. A record, remember I said assets under management, 10.5 trillion, up 1.4 trillion year over year. It's unbelievable what they're, it's like, so then you go to how, where did I read that they were just all focused on the individual investor and making sure that, you know, they took care of the individual investor. Well, really it gets down to the nitty gritty in their financial results. By client type, retail is the individual investor, right? Retail, individual investor, net inflows. Here, I want to give you the total 57,190,000 right there. But I want to show you their institutional numbers because it's a very different, very, very different story. 10.4. Okay. This is, yes, this is the, okay, retail, right? Retail subtotal is 929 million. Institutional, this is where the rubber meets the road, y'all. So 929 million, they're like, yeah, we're so much about the retail investor. We really want to help the retail investor. But here, look at institutional subtotal, 4,815,000,000, 4 times the amount of the individual for the individual retail. So they are all institutions, full on in institutions, cash management, making a fortune. And when I started to see this, I started to think, what other companies are going to experience a similar type of return as it relates to, you know, BlackRock investment dollars? Where can we find that? SCHW, Chucky Schwab right here, Charles Schwab. I think at this point in these equity markets, we've got to be looking at not specifically banks per se, but asset managers, right? Asset managers, you've got a great one here, even pays a dividend. And I just think companies like this are going to be one of the winning industries in this type of economic situation where we are told one thing, but we're really experiencing another thing. So this is how you capitalize on that type of narrative. You go with, what is the market projecting? What are the economists and the analysts portraying in this market? Healthy, strong, low unemployment. Like, it's unbelievable what they're saying, but go with it. That's what I'm trying to say here. You know, just go with it and put your money to work, make some money. I hope this was helpful. Thursday night, this Thursday, I'm going to open up a new beginning options investment group. We're crushing it in some of our groups here, and I want to make it available to more people. So I'll put the link to that in the show notes today as well. That's this Thursday, April 18th. I know, I apologize. I sent an email that said October, just seeing how many of you are paying attention. A lot of you are, so thanks for reaching out. So I'm going to join Thursday night, this Thursday, because I'm also going to talk about, I'm going to have another group I'm starting on Thursdays that's going to be kind of an option light program where those who may not have the 100,000 US to start the options program can start with me on a different level and slowly build up to that 100K level. So I'm excited about that, and I'll share more details about that on Thursday as well. Have a fantastic week. Hope to see you Thursday.